That was the introduction part of the working capital management. Also, the concept of the matching, conservative and conservative blessing. Components of working capital. So we talk about management of receivables. Management of receivables, a small subtopic. Management of receivables. Let's say this. Receivables constitute a significant portion. Receivables constitute a significant portion of the working capital components Hence, its management should be carefully planned. Hence, its management should be carefully planned. Next point. Just like any other working capital component, just like any other working capital component, the objective is to maximize the returns. The objective is to maximize the returns, stroke profits, and to minimize the risk. Stroke cost. Now, when somebody asks you about what are the objectives of working capital management, we only have two key objectives of working capital management. One, we're managing our current assets and current liabilities so that we can maximize our profits for the returns. And of course, the second one, we can minimize the risk. So we manage stock so that we can make a lot of profits as a company, and we can also minimize the cost, as you shall see. No, so the examiner can decide to put it in two perspectives. That question can be tested in two perspectives. Can ask you about the objectives of working capital management, maximize the returns, minimize the cost. These are really two. Or you can go specific. What are the objectives of receivables management? What are the objectives of inventory management? What are the objectives of cash management? These are two million. Maximize the returns, and the second one is to minimize the risk. So, next point. Next point to say the level of investment in receivables. The level of investment in receivables is influenced by the annual credit sales. And the receivables period. It's influenced by the annual credit sales and the receivables period. So average collection period. Receivables period from average collection period. i.e. receivables equals to annual credit sales divided by 365 times receivables period. Annual credit sales over 365 times the receivables period. So kama sales zitakuwa affected, debtors wetu pia watakuwa affected. If the collection period itakuwa affected, debtors wetu pia watakuwa affected. But then pale variation nimesema meiva, how do you get the average collection period? Ndio watu wanashine. How do you get the average collection period? Annual credit sales divide by, ukisema tunaandika divide by average something imalizia mbele debtors. Thank you. Times 365. Average debtors, you know, look again, you suspect. So debtors na average debtors ni sawa. Kwa kuna opening na closing balances to get the average. Ndio. Na badika ile hiyo tunasumbua super tu jaja. Kama ni formula anataka hii. So just make this the subject. Na ukimake the subject utagundua kuwa hii inafaa kuja chini na hii iende. Ndipo vile kama iliandika hivyo. But I appreciate that kuna mahali kuna annual credit sales, na kuna mahali kuna 365, na kuna mahali pa average debtors ama debtors deliver asset. You will exempt yours. Haya sawa. Hii mlisoma kwa ile subject ingine, ndio. Kwa wale wa exempt hiyo subject. Alafu kwa wale wa exempt nilishare kwa notes. Yana maanisha zote zijafunguliwa. Hiyo ni ile target ya next week still. Ya kunile kwa nasema hizi 1 week to exams. Nitalitambua. Na sisi tunaomba 1 week to exams, blackout is 8 okay. Anyway, so when you make receivables the subject, hii itakuja juu, hii itakuja chini. So our annual average annual credit, whatever the receivables period, the annual average collection period, debtors wanakuja hapa juu, sindio? Na credit sales wanakuja wapi? Hapa chini. Sasa utaconfirm pole najua kitabu. Anyway, so let's continue the notes. Say this. Let's continue the notes. The management can influence its level of credit sales. The management can influence its level of credit sales receivables period, its level of credit sales, receivables period, and consequently, the level of debtors, and consequently the level of debtors through a change in the firm's credit policy. Through a change in the firm's credit policy. So tunaweza kama management, tunaweza influence credit sales zetu zitakuwa ngapi? Tunaweza influence how long our customers take to pay us. And what are the consequences of that? To even affect our debtors. And how can we do that? By changing the credit policy. Next point, the term credit policy. The term credit policy is the combination. The term credit policy is the combination of 3 components. It's a combination of 3 components, i.e., number A, credit standards. Number B, credit terms. And number C, collection effort. Collection effort. Let me just highlight something. Credit standards. Credit standards are the conditions put in place. Credit standards are conditions put in place that should be met. Credit standards are conditions put in place that should be met for one to qualify. For one to qualify for credit. Are conditions put in place for one to qualify for credit. So what are the standards that the company has put in place that one must always meet for him or her to qualify for credit? Continue by saying, if the standards are so lenient, the level of credit sales, if the standards are so lenient, the level of credit sales, that's the lenient in them. Help the neighbor to help the neighbor. Lenient in adequate. Is it LE? I just tried. Is it that way? It's not that way. Just write something. Just write something. So you're saying that if they're so lenient, the level of credit sales, bad debt losses, and receivables will be so high, and vice versa. So kama tuko strict, tutakuwa na bad debts mingi because almost everybody will be able to qualify for credit. So credit sales zetu zitakuwa mingi, debtors wetu pia watakuwa wengi, na bad debts pia zitakuwa mingi. When you are so lenient, but when you are so strict, it will be the opposite. Very few will qualify for credit. Bad debts will almost be zero because by the time una qualify, lazima tuwe tumekuchuja vizuri. Yeah, and even our debtors will also be below the sum. So that's about the standards. Next to talk about credit terms. Credit terms refers to the credit period. Refers to credit period offered to customers. Credit terms refers to credit period offered to customers, including any early settlement discounts. Including any early settlement discounts. E.g., credit terms of 2/5 net 15. Credit terms of 2/5 net 15. But this firm is offering credit terms of 2/5 net 15. How can you interpret that? You take your card, inject 2 divided by 5, and net in a 5 times some plus. Inamaanisha nini? Any idea? There? You multiply, alafu unapata ngapi? The calculator knows. Alafu kisha multiply utamwambia kwa hizo terms ni gani? Maisha ni by this size kwenye semester imefika. You say anything. Then you say with confidence, knowing that this is what I know. And if it is supposed to, if it is to come in the exam, this is how to write it. What would you write? Ama hii swali ukipata unapeleka question 5. becomes your question 5. Your question 5 ni ile huwa unasema nikipata time nitaifanya. So by the inamaanisha kuwa if you have credit terms of 2/5 net 15 inamaanisha customers who pay within 5 days will be given a 2% discount. Those who want to manage should not go beyond 15 days. So pay within 5 days and get a 2% discount. Otherwise, don't go beyond 15 days. So if you go beyond 5 days, there will be no discount for you. But don't go up, don't exceed above what? The 15 days. So credit terms of 2/5 net 15 means a 2% discount. A 2% discount is offered to customers. A 2% discount is offered to customers who pay within 5 days. Who pay within 5 days. While the remaining customers should pay within 15 days. So wale wanalipa na 15 days hawata enjoy discount. So any customer who pays after 5 days will not enjoy the discount, but we cannot just leave it open. We also give you a limit, right? Yeah. Ule mwenye hata enjoy the discount asipitishe 15 days. Those are our terms. Then finally, next we talk about collection efforts. Collection efforts and the procedure in place. Procedure in place for dealing with overdue accounts. Procedure in place for dealing with overdue accounts. i.e., accounts which remain outstanding. Accounts which remain outstanding after their due dates. So 15 days imeisha, kuna wale customers ambao bado hawajalipa. How do we deal with them? So you must have some procedures put in place that you should follow when dealing with such kind of customers. This may include phone calls, reminder emails, personal visitation, can send our staff there. Personal visitation. Factoring. And as the last resort, legal suit. And as a last resort, legal suit. What is factoring, by the way? Let's say, freelance, maybe a management. We sell or we give a list of data to that institutions. Yes. Then they give us the cash. Then we leave them with the obligation of now collecting from our debtors. So that it becomes their responsibility to collect that money after they have paid us. Yeah. For lugha ya mwananchi, you heard of these people called debt collectors. So debt collectors ni jina lugha ya mwananchi. Lugha ya finance wanaitwa factors. They are not individuals, they are companies. Have you heard of this Capital course called credit management? Credit management. That's the professional course for most people. So it's a marketable course. Na pia risk yake iko juu, sio? Ukienda kudai deni, sio unaweza kufagia. Ndio. Ndio kudai deni kwa mtu mmoja hapa na deni ya mabilioni na unamthreaten. So it's a good course. Chana wanawatafuta sio? Akina branch. Stika foreign ama stika foreign branch still in another financial institution will have credits. Yes. But you see, yes, even in financial institutions we have a department, lazima tuwe na credit departments here. So credit department basically it's controlled by those people factors. So, and mostly what happens is for these factors, it's a company that is registered. So when it's a department in a company, then it's not called a factor. Because the factor is an independent company that is registered, and its also responsibility is to help other companies collect their debts. So we come, we negotiate with you, we tell you that look here, how much are you having outside from with your customers? I'm having 8 billion. Let's sign a contract. We guarantee you immediately sign a contract, we advance you 80%. 80%. So tunabaki na 20% ya kupea. And even as we advance to you, we don't advance for free. Tunacharge some interest on advance. Sio ni pesa tumepata kama factors. Then it becomes our responsibility to ensure that we collect 100% of your debts. We recover our 80% that we had given you, and we give you the balance of 20%. So kama utakuwa na any bad debts, sasa inakuwa ni letu. Sasa, so it helps you navigate some of these issues and stop concentrating on your debtors, concentrate on running the business. Sasa, hiyo ndio ulikuwa unakuja to negotiate. Customer, debtors to achieve. But there's a risk when you hand over a customer to a foreign. What are the chances that that customer will come back? What are the chances that that person will mistreat your customers? It's very high, sio? Hata hajui mpata aje. Ni kama mimi saizi kwanza kuambia kuwasukuma kwa mtu mwingine deal na nyinyi. Hata mtu ajui hata tunaishi aje zile. Yeah, so that's the risk, but it happens sometimes, and you know that factor has nothing to lose, even if you lose your customers. Bora collect pesa zake. Yeah. Good. Can skip one line, then you say this. In managing receivables, we prepare a statement of additional. We prepare a statement of additional annual financial benefits. A statement of additional annual financial benefits, stroke costs. A statement of additional annual financial benefits, stroke costs. Also, then you say, increase in current liabilities. Increase in current liabilities leads to an increase in opportunity cost. Sorry, increase in current assets, not liabilities. Increase in current assets leads to an increase in opportunity cost. Increase in current assets leads to an increase in opportunity cost. When increase in current liabilities, leads to a decrease in opportunity cost. When increase in current liabilities leads to a decrease in opportunity cost, and vice versa. By the way, when debtors increase, are we happy or we are sad? It means more sales, but not guaranteed. It's never guaranteed that debtors wakiongezeka umesell sana. Sindio? Debtors wanazoongezeka ndio umesell kidogo sana. Lakini simply inamaanisha kuwa customers wako hawakulipi. Sindio? So now debtors are increasing, we are not happy. Opportunity cost is the return for our goal. Right? So now our debtors are going up, which means we have a lot of cash in the hands of our customers. We need that cash to be in our hands. So there's a return that you are foregoing by not having that cash within our disposal. Yeah. So that's why tunasema current assets, the debt is an example of current asset. When it increases, the opportunity cost is also increasing. When stock increases, are you happy? Why? Because the demand is high. When the stock increases, when the stock reduces, we are happy because we are selling more. But again, it's never guaranteed. What is our intention? To have more stock or to have more sales? To have more sales. So, when the stock increases, it is very risky. Why? Holding cost is there. So storage pay inatupita to cost, si ndio? Kama ni stock ya kuharibika haraka, tunaumia, si ndio? There's a lot of cost associated with holding too much stock. That's how. So when what if we have too much cash in our company? Are you happy? Partly happy, partly sad. Thank you. I cannot be happy when I have too much cash in my company. Then I don't know why I'm in business. Because that means there's some investments I'm foregoing. There's some returns I'm foregoing by not investing this cash somewhere and having it in my company. So look at it. Remember, we're looking at it financially now. We're finance managers. We're finance managers. By the way, in finance, we're even happy if we have zero stock in the company. Can you imagine a situation where umenunua stock yako yote na customer amekuja amenunua yote? You're a happy man. So we don't need stock in our company because we always have stock for us to be able to sell. For us to be able to sell. Now, look at it from a different perspective. When creditors are increasing, are you happy? Yes. When creditors are increasing, you're very happy. Why? It means no one is pushing you to pay. So you're using their money. So that's why we're saying when current liabilities increase, we are happy. Opportunity cost reduces. It inamaanisha kuwa I'm given a chance to use that money, invest somewhere and get some return. So, and of course the opposite will always apply. Let's go to the past papers. Fanya kakitu. Data zimetestiwa sana. I think we can get it almost in every sitting. Let's check if it was tested last sitting. Last sitting only in test cash in our model. Check question 4C of last sitting. Question 4C. Of last sitting. Page number 3. Nitumie kwa group tena. Asipeka. Sawa. Acha nitumie kwa group. Nitumie. Sawa. So question 40, December 2022. Now, we are told that the following are the summary statement of profit and loss and statement of financial position for Miranda Limited for the year ended at 1st October 2022. Summary of statement of profit and loss, that's our income statement. Sales to Konazo on 50,000 units, variable costs, fixed costs, and the profit. Statement of financial position, non-current assets, current assets of the receivables, inventory and bank, trade payables to Konazo, financed by equity 12% debt and 6% preference shares. Return on investment is 4.8%. All sales are on credit, and the company operates a very strict credit control system. So sales noted on credit, no problem. A suggestion has been made that a relaxation of credit policy would increase sales by 40%. If the company were to introduce a 2% discount, at present no discount is given, right? On accounts paid within 10 days. So you get a discount of 2% if you pay within 10 days. Clear. It is envisioned that 70% of the customers will take advantage of the discount, and the average collection period of the remainder will be half of what it is at present. So kama tunaweza pata the average collection period size, then a half of it will reduce by a half. So bad debts would remain at 2% of the firm's credit sales. Investors' required rate of return is 10%. Still cost of capital is like the opportunity cost. Assume 360 days in a year, then for 1 month, the current average collection period. So how do we get our average collection period? Equals to average debtors, average debtors divided by what? Annual credit sales times 360. Wamesema tumie 360, si ndio? Sema tumie 360, let me adjust this. So times 360, that's okay. Currently, we have our debtors. Debtors are always in the balance sheet. Are you having 3,000? Pia neighbor debtors ni sawa na receivables. Currently tuko na debtors kwa 3,000, ndio. Na credit sales zetu ni ngapi kwa income statement? I see 15,000. All sales are on credit terms. That's what we are told. So how much is our receivables period? Tena. 22. So currently we have 72 days. So inamaanisha kuwa with the new terms, those who will not enjoy the discount will pay within how many days? 30? I think 36. So alisema tukifata English yao, si ndio? Fata English yao walisema So that gives us the 1 mark. Then number 2, the new level of profits after change in credit policy. The new level of profit after the change in the credit policy. So the new level of profits, our targets are compared, they don't want the existing ones. The existing already know the profit. So tuangalie itakuwa namna gani? So number 2, new level of profits. New level of profits. So this one an income statement. So in thousands of shillings, we have our sales. Our sales wamesema zitaongezekana ngapi? Zitaongezekana 40%, si ndio? So can you say 140% of 15,000? So sales zitakuwa ngapi? 21,000. You're supposed to less the variable cost so that we can get. You're supposed to less the variable costs. Siko hapo. Now, let's see what happens to the variable costs. So variable cost does not tafute a ratio. So that you know, variable costs increase with the increase in sales. So can we have the variable cost ratio equals to variable costs divided by sales? So currently our variable costs is 13,500. Na sales zetu currently ni ngapi? So how much is our variable cost ratio? Zero point 9. So meaning variable cost is in 90%. So at a sales increase, variable cost pia lazima increase. So variable cost will be always 0.9 of sales. So therefore, can we less our variable costs, which is 0.9 of 21,000? Ninety percent of 21,000 is how much? 18,900. We also have fixed costs. Fixed costs yenye tuko nazo pale juu ni 600. Lakini pia kuna discount na inakuwa introduced. We're introducing a discount of what percent? 2% discount. Sindio? What percentage of customers will enjoy the discount? So the discount rate is 2%. Sindio? And of our sales of 21,000, wangapi wata enjoy the discount? It's 70%. 70% of our 21,000, sindio? So can we have the amount of discount that will be offered? It's a cost to the company. So for zile sales, 70% at 21,000, the company will lose 2%. Inapeana discount. So tukipeana discount, we are losing from our end. Sindio? And tukilose, that is a cost to us, right? So how much is that cost? Sorry? 294. 294. Alafu akasema budgets will remain at 2% of the firm's credit sales. So budgets can talk about additional bad debts. Additional bad debts. 2% of what? credit sales here. So 2% of 21,000. So how much will your bad debts? Much? For 20. That is it. Yes. Kazi ilikuwa wapi? So how much is our 6 marks? This question was tested different from the normal one. The normal one, you always do some comparison as we are going to see. Maliza hii tuangalie nyingine. 796. 786. They have 786 there for 6 marks. Then you're being asked for the last 2 marks to explain the effect of the new level of investment in account receivables. So the effect of the new level of investment in receivables. So how will debtors be affected? How will debtors be affected? So you need to know currently debtors wetu ni wangapi? Currently debtors wetu ni 3,000. So natuuliza, will our debtors change? So in answering number 3, tuna appreciate for current level of debtors is 3,000, right? Then new level of debtors, we know that how we get the debtors? Annual credit sales divided by what? 365 times the receivables. Receivables period is on average collection period. Right? Now, anytime there is a discount, anytime kuna discount, then debtors wanakuanga mara mbili. Kuna wale 70% ambao wataenjoy discount kwa kulipa na siku ngapi? Kwa kulipa na siku 10. Ndio tunatuambia 2% discount for those who pay within 10 days. The remaining customers will pay within a half of 72. Right? So, tuanze na wa kwanza, wale wenye wako na discount. With discount, what percent of our customers will enjoy the discount? 70% of how much? 70% of 21,000, right? Will enjoy the discount by paying within how many days? 10 days. How much will go ahead us then? $14? Huh? Oh, 360, sorry. What's about me at 360? What are the T? Now, put your wangapi? 408? So 408.33. Sawa? Alafu tuko na wapili wenye hawana discount. So if 70% wali enjoy the discount, wenye wako enjoy ni wangapi? The remaining 30%, ndio. How to enjoy the discount? Na utalipa within how many days? A half of 72. Ndio ile English inasema, note number 4. And the average collection period of the remainder would be half of what it is at present. The period presently is 72 days. So a half of 72 by saying 36. So they'll pay within 36. So therefore, the remaining 30% of 21,000. I want to enjoy the discount, but I live at 13. This 32 is a half of 72. No. A half of 72 is 36. And 36 back. So how let us work on that? 630 flat. So new level of debtors 1038. Then 38.33 slip. Right? So they asked about the effect of the new level of investment in account receivables. So can you have the change in the increase in debtors? So increase in debtors, when I increase to 1038 from how much? But actually increase. Increase in debtors. So 3,000 minus 1038.33. Debtors want to reduce number. $1861.67. So that's what was expected of us. Kuna sitting working capital inaleta maswali mbili, kuna cash management na kuna receivables management. Cash management tutaiuza next week. Gani hizo? What to what still? What to what? Tujaribu kupitia hiyo handout. Nitaguzia tu next week. Sasa nitaguzia tu next week, but the handout carries almost all theories that are tested. Sasa wewe ikikata uko na backup. Nitwanga forward plan. Fallback plan ndio. Naweza kupata 50. Averagely there. The paper is always balanced, average. So it's kufika 15 40 something, quantity ni 40. So unaweza pita bila hiyo. Lakini huwezi pita bila hesabu. Finance, you must do some computation and you blend it with some theory. So you blend it with some theory. So theory to sizilenge. You are sometimes students, especially who are accounts and finance. I know people, accountants and finance people hate theory. Tena sana, sindio? Hata during marking, we don't like theory. And trust you me, you just write some rumors that make some little sense and will give you marks on those theories. We are not very keen to read a lot of theories. Sasa, in fact, from where I sit, sometimes I do mark, but I don't see. From where I sit, to mark theories, we don't read it. We don't read it. Tuna scan. You just scan. You know what I mean by scanning? You look for a rumor. Sasa, but usidanganye ile story ndio watu kuambiwa sijarudia kuandika swali kwa theory. My lecturer used to tell me that wewe hakikisha umeandika umejibu theory, lakini hata katumana we copy paste your swali weke hapo hapana. At least apply some knowledge ndio. Apply some knowledge. Hata kama it makes sense. Najua unaweza soma kaswali na ukaimagine hata kama ukiona mahali ndio. Ukaimagine some English that relates to the answer. But I know ukipitia hizo theories zetu, you will get some information hata kama ni kidogo. That information that you have will make you pass this. Sasa kwa hivyo nikiskani rahisi sana nione uongo. Ndio. Kwa hivyo scanning nimeuliza swali la kama hapo hilo swali vile liko. Nimeuliza swali ni explain 3 factors that influence the dividend policy of a firm. Even as I scan through, because remember I'm competing for money, by the way. That's the unfortunate thing in marketing. The more the number of scripts I mark, the more I earn. So I really want to finish with your work as fast as possible. Itapate pesa kwingine. So mimi sitaki kuumia nikisoma ndio repetitive mingi. So siandike story mingi, kwa nika points ukisummarize. Lakini zi make some little sense. Sasa yeah. Tunapata 3 factors that influence dividend policy. Unasikia mwalimu mtu ameandika for full and never taught. And then in English. Lakini nikiscan nitaona kuandika. I was just giving an example. So write something that relates to that question. Sasa anyway, tuangalie August kama letter receivables. August will letter inventory. August will letter inventory. Let's check April. April question 2B. April 2022 question 2B. Now, the following information relates to Triplex Limited. The company has annual sales revenue of 6 million and all sales are for 30 days credit. Although customers on average take 10 days more than the recommended 30 days to pay. So in reality, customers take how long to pay? Is it 30 or 40? Page is 9. Kwa hiyo English customers wanalipa na siku ngapi? 10 days more than 30. So meaning wanatake 40. So nisione mahali umeandika 30. Because tuna deal na reality. Sasa examiners hapa na ujinga. Anauchanganya na 30 alafu anakuambia they take 10 more days. So currently our receivables period is how many days? 40. So 30 is what is in their terms. But per ground, wanna take 40 days. So you go with reality. Contribution represents 60% of sales, and the company currently has no bad debts. Account receivables are financed by an overdraft at an annual interest rate of 7%. Triplex Limited plans to offer an early settlement discount of 1.5% for payments within 15 days, and to extend the maximum credit offered to 60 days. So watakupa na discount kwa wale watalipa na 15 days. Wale wengine walipe na 60 days. Sindio? The company expects that these changes will increase annual credit sales by 5%, while also leading to additional incremental costs equal to 0.5% of sales revenue. The discount is expected to be taken by 30% of customers, while the remaining customers would take an average of 60 days to pay. Evaluate whether the proposed changes in credit policy will increase the profitability of Triplex Limited. So hapa ni kuangalia cost benefit analysis. So we look at it, we compare current policy with the proposed policy. Current policy with the proposed policy, and we find out if there is any increase or decrease. So carrying out the cost benefit analysis, well, what are the change? So you can have these figures in thousands of shillings. You can another to the normal income statement. This is how these questions are normally set. They want you to advise. They want you to advise. Alafu tunajiuliza, tunatengeneza income statement, sales. Currently, sales zetu ni ngapi? 6 million, right? So currently sales is 6 million, that is 6,000. With the new policy, sales will increase to how much? Will increase by 5%. Clear. So it increase to how much? What is 105% of 6,000? It's 6,300. So sales are increasing by how much? When sales increase, is it a benefit or a cost? Are we happy? Yes. When sales increase, we are happy. So that's a benefit, right? Then umetuambia contribution is 60% of sales. So can you have a contribution? Kutengeneza income statement ya kawaida. Contribution represents 60% of sales. So 60% currently is 3,600. 60% of 6,300. How much? That's 780. So contribution is increasing by how much? Benefit or cost? It's a contribution increasing. Contribution in profit way. Profit ikiongezeka kuna furaha, sio? Yeah, na nimeweka hiyo line hapo juu because that's the profit. Normally tungefanya sales minus variable costs. Tupate contribution forward ever, backwards never. Ndio. Kama subtract tutakuwa tunanielewa. Ndio. It's supposed to be sales minus variable cost, we get contribution. We already have our contribution. So we continue our workings. Atuangalie kama kuna costs zingine ziko hapo. Note number 1, I think we've dealt with it. The 40 days will come later. Contribution tumedeal nayo. Accounts receivable are financed by an overdraft, tutakuja baadaye. Triplex plans to offer an early settlement discount. Do you have cash discount? Currently, there is no discount. But the discount will come with the new sales at a rate of 1.5%. How much of our customers will enjoy the discount? Note number 5 here. So the discount will apply to 30% of how much? Oh, say 30% of 6,300. So how much will be our discount? Eight. 58.35. That's the cost, right? So discount previously ilikuwa 0, saizi imekuwa 28. That one we are losing. So 28.35. That's a cost. That's a cost to us. What else is there? Do you have bad debts anywhere? Well, some incremental sale cost, not number 4, while also leading to an additional incremental cost equal to 0.5% of sales revenue. So we have additional costs. So that additional cost currently is not there, but it will be brought in with the new terms at the rate of 0.5% of 6,300, right? Tumepata kwa kalka 283. So here it is 1.5 divided by 100 times 0.3 of 6,300. 58.35. You took 15%. Yeah, be careful. It's 1.5. Sasa hivi uko kini nayo. Badala ufanye 0.5 over 100. Tufanye mjinga, si ndio? Badala ufanye 0.005. You might end up doing 0.05. So rather 0.5 over 100 times 6,300, si ndio? That 1.5. So previously haikuwa, they shall have that 1.5. And it's a cost. So at that point, we have, remember that in an income statement, you have our pre-tax cash flows. But then we are not interested with this. We are interested with what? The incremental. This one and these ones are only standing in as workings. Working towards our target. Our target is to find out if we are gaining or we are losing. So pre-tax cash flow is how much? 180 minus the 2. Oh, sawa. Sasa ndio wakati unaogopa kutoka nayo. 120.15. Do we have tax rate? Kama tungekuwa na tax rate, tungeless tax. But we have tax rate. In finance, tulisema hatugezi taxes. Kama hakuna. Sasa inawakeza tujapewa the tax, ndio. Kama tungekuwa na 30% or whichever the rate, tungeiless. Then after that, you bring in this animal called opportunity cost, which is about current assets and current liabilities. One of the key current assets that we'll never miss is receivables. So umetupigia hapo story ya debtors. The receivables period, it changes you from what to what. So we need to get our debtors. And hapa tunaweza fanya wapi? Interest on what? Sasa hiyo inakuja na debtors. Because debtors are overdraft is financing our debtors. So there's an opportunity cost that you are going to incur by our customers not paying us. So your overdraft is 7%, that will be the cost to us. Debtors wakipunguka, then that means we shall not pay that cost. So umetulipa. So tuko na pesa, si ndio? Debtors wakiongezeka, then inamaanisha you shall have to pay that cost. to fund our operations because customers are not paying us. Sasa how the question was asked. Kwa hiyo swali lingine hata hii part hatukudeal nayo. Hatukudeal na additional. Sindio? They only asked about what? The new profits. The new profits. Sasa na normally hata kwa income statement, debtors wanapanga kwa income statement kweli? Hapana. So profits zetu tuliishia. Kama tuko na tax, tungeless tax kwa ile swali lingine. Sasa lakini hapa they want us to advise whether the new policy is good or bad. Sasa so let's have a working for the receivables kama debtors. So hapo acha tu space kama lines kidogo nne hivi, alafu kwa pana working ya debtors. So debtors equals to annual credit sales divided by what? We do 360 or 365. That's silent. If they're silent, we do 365 still. Times receivables. Period. So currently, under the current policy, all sales are on credit unless otherwise stated. That's why you have debtors. So currently, how much is our credit sales? 566,000. And customers take how many days to pay? Not number one, 40 days. So how much is our debtors currently? $657. Points. 658. Nitoi na 658. So hapo kwa current policy weka 658. Then we look at the proposed. Proposed policies tena kuna discount. Na anyway kuna discount, tufikirie debtors mara mbili sio. So kuna debtors wa kwanza wenye wako na discount. How much of our credit sales will enjoy the discount? I think 30%. 30% of how much? Of 6,300. Will enjoy the discount and pay within how many days? I think 15. Will enjoy the discount and pay within? And pay within 15 days. So how much is our debtors? Computer inasema ngapi? How much? 77.8. Niseme 78. Rahisishe kazi. Haya. Kuna wale wenye hawana discount. So those ones without the discount, if 30% enjoy the discount, wangapi wamebaki? So 70% of 6,300, right? Will not enjoy the discount and will pay within how many days? 60 days. . So how debtors wako wangapi? How much? 775. 725. Thank you. So debtors wetu wako wangapi under the new policy? 800 and 975. 803. So tukuja hapa kwa proposed policy tuweke 843. Debtors are increasing or reducing? So it's an increase. What is the cost of the overdraft? So debtors don't appear in the income statement, but the cost, the opportunity cost is what appears. So by our debtors increasing, then that means we shall have to go for an overdraft. Kwa hiyo balance ambayo customers hawajatulipa. Wakireduce inamaanisha wanatulipa. So we are saving some amount that would have otherwise gotten it from through an overdraft. So the decrease times 7%. So hiyo negative ni ngapi? Times 7%. 10.15. Now your 10.15 is not a negative, it's a positive. It's an increase, right? It's an increase. Increase is a negative. Increase in current assets, increase in opportunity cost. So do you have the net benefit? 120.15 minus 10.15. We get 110. Right? So is it advisable to change the policy? Is it making us more rich? It's making us more rich still. So we're trying to evaluate whether the proposed changes in credit policy will increase the profitable of Triplex Limited. So we've already evaluated. So it will increase the profits, right? It will increase the profits. So maybe we can we do one more? Let's see if we can do one more. September 2021 versus 40. September 2021 versus 40. Cooperative Wholesalers Limited deals in sale of foodstuffs to retailers. Owing to economic depression, the firm intends to relax its credit policy to boost productivity and sales. The firm's current credit policy is net 30, and the average debt collection period is 45. What is in their books is 30 days. But in reality, they take how many days? So receivables period is 45 currently. The current annual credit in amount to 60 million. So the current annual credit, the credit sales or debtors, should that be credit sales? The firm intends to change. The firm intends to change. The firm intends to change to net 60, where sales are expected to increase by 25%. Credit and debt analysis costs will increase from current 2% to 2.5% of credit sales, Bad debts will also increase from the current 1.5 to 2% credit sales. Variable cost account for 75% of sales. Sorry, and the return on assets is 12%. Assume 360-day year. Advise the company on whether to adopt the new credit policy. Hiyo ndio tuliogopa ipate wewe. Hiyo net 30. That's it. Na hiyo net 60. Siogope. So tuko na current policy, proposed policy. Then we find out if there is a benefit and a cost. Can we have our sales? Currently sales ni ngapi? 60 million, ndio. That is 60,000. Na umesema sales zitaongezekana. The firm intends to change where sales are expected to increase by 25%. So how much will be our new sales? 125% of 60, ndio. Giving us 25,000. So sales the increase na ngapi? Good or bad? We are happy, right? Yes. We are happy when sales increase. Have we been told about variable costs? Variable costs are always at what percent of sales? So there's 5%. Sindio? By the way, hii unaweza ifunga. You simply do 75% of 15. Ama tukifanya ni sawa, but you are interested in the cost benefit ile mbele kabisa. So, what is 75% of 60? Let me stop changing the rules of the game in the middle of the match. How much? 45. That's a variable cost. 75% of 75,000. 56 to 15. What of 75% of 15,000? How much? 11 to 15. Same cost. Sasa, sinaweza fanya direct 75% of this. Because nikienda hivi, if I do this minus this, nitapata hii. Sindio? That's why nilisema, hii si lazima. As long as we're gonna sales, no matter sales in 75% variable costs, 75% of sales, you're good to go. Sorry? You can still get 25% of that equal contribution. Because you're preparing the income statement. So you not have a contribution. Because to put a variable cost, our next thing is what? Contribution. Like nasa kupungi. So what is the contribution? 15,000 minus 11 to 50. 50. Sorry? That's 750. So contribution is increasing still. But that's 750, that is okay. Angalia kama kuna items zingine za income statement. Credit and debt collection, credit and debt analysis costs. So do we have credit analysis costs? Currently, it increased from 2% to 2.5% of the credit sales. So currently, the 2% of 60,000 rate. And with the proposed policy, it about 2.5% of 75,000. Just the English. So currently, 100. 1200. 1,200, right? With the proposed policy, 2.5 over 100 times 25,000. Sorry, 13, 1875. So they are increasing by how much? 675. Good or bad? That's the cost increasing. That's the cost increasing. What else is there? We have bad debts. Bad debts. So bad debts will also increase from the current 1.5 to 2% of credit sales. So currently 1.5% of 60,000. With the proposed policy to about 2% of 75,000. So 1.5% of 60 is how much? 900. The proposed policy to 2% of 75. How much? 1,300. So an increase of that is good or bad? That's bad, right? We have cash discount anywhere? Hakuna discount this time around. Tumemaliza. Hakuna discount, sioni expense ingine. So at that point we have the pre-tax cash flows. The 750 minus 675 minus 600. So that's 750 minus 1275. Yes. Of 25. Let's suppose we guess what? Task which is not there still. Then we bring in opportunity cost. Na kwa opportunity cost nataka receivables tutajaribu kuifanyia hapa, which equals to annual credit sales divided by 360 or 365. 360 times the receivables period. Under the current policy, how much is our credit sales? 60,000 still. Divided by 360. Customers take how long to pay? Is it 45? 45. Right? Now proposed policy 75,000 divided by 360. Customers will take how much? How long to pay? 660. The terms will be next 60 here. So customers will take 60 days to pay. So currently data is 60,000 divided by 360 times 45. How much? 7,400. 7,500. With the proposed policy. 12,500. Increase or decrease? Increase, decrease? So it's an increase. So opportunity cost is again increasing. What is the cost of capital? Return on assets is nothing. 12%. Cost of capital will about 12%. So the change is 12.5 minus 75 takes 12%. Exactly. Just 6, right? The cost of the benefit. It's an increase in opportunity costs here. So do you have net benefit or net cost? Net benefit. 2475 minus 600. 1875. So advice inakuwa gani whether to adopt the new credit policy. So advice inakuwa the company should adopt the new credit policy. So right for in English, the company should adopt the new credit policy. In case we go down, I think negative, yes, then they should say they should not. It will mean that change is going to be linked to a cost. So we're going to suffer. So they should not change our policy. But why? Because it's an increase in opportunity cost. Debtors are increasing from 75 to 12. We're not happy. Increase in current assets leads to an increase in opportunity costs. So debtors wanaongezeka from 25 to 12,500, meaning what? Our customers are not paying. So if we need that money, lazima twende nje to borrow na 12%. Sasa kitumia example ile ingine tutasema lazima twende overdraft ya 12%, so it will increase the cost. Ndio. Kama debtors ungekuwa nakumbuka inamaanisha wametulipa. So ile tungeendea nje na 12% tutaisema. Because the resultant answer is the positive. Despite here being a cost, there are some other benefits that will come in. So the final result is the benefit. The company. That's how. So you check question 3C. May 2021. May 2021 question 3C. Check on that one. Then you see each other next week. Our next class is supposed to be on Tuesday. On Thursday.